He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
We are back.
We are back.
Angry Mortgage Podcast is on the air. Natalie Butler, realtor extraordinaire. Ron Butler, old, tired, worn out, overly pudgy mortgage broker guy. Listen,
this is the long weekend edition.
It's a long weekend. Yeah, this is after the long weekend. We tape before the long weekend. It's after the long weekend when you're hearing it. Month end is always interesting in the mortgage business, right? It's
month end kicked our ass.
Lots going on. Yeah, there's a lot going on.
We are exhausted.
So there's a lot of news last week. There was a lot of news. Here's a great one. One I love. It's a guy I've known for 27 years. Benny Tal at CIBC. Mm-hmm. Very smart guy, but he is literally the mortgage housing guru of this. He spends all his time thinking about interest rates, mortgages, housing, valuation. That's his specialty. That's what he spends an enormous amount of his time on.
Okay, so what did Mr. Tal have to say?
So this is really, there's only one appropriate way to describe this. It's fucked up. Okay,
well, we've been saying that for months and weeks.
But like this thing he came up with was amazing. So the federal government, we talked about this last show. They had their retreat where they go down and call the cabinet ministers. They have lobster rolls and ice cream and a little bit of white wine, and they're all meeting there. 40 cabinet ministers, prime minister, the whole shooting match is there, and they invited a lot of people down. Some other guys I knew who went down, and housing people. They invited nothing but housing people.
Yeah.
And Ben is the mortgage, housing, interest rate expert. He is the guy. Okay. But I didn't know he was going, but he was there, and then during the meeting, he showed them, the whole cabinet, that they were miscounting the number of people in Canada. Yeah, it's
miscounting.
Miscounting, unfucking believable. So he shows them how, you've got all these people who are temp workers, student visas, the whole 9 yards. Okay. StatsCan this is apparently what happens. StatsCan doesn't bother to check if they ever leave.
Oh.
So Benny's saying, I think there's a million more people here than you were thinking there was.
Extra million.
A little extra million. A little miss. Tiny miss.
Off slightly.
Little tiny miss on the population. So it says, what's with you? How do you do analysis?
Yeah.
If you don't have any information, you don't have the right information. You don't even know how many people live here, for heaven's sakes.
Well,
okay?
I guess in their eyes, they were doing a really awesome job because they were, spreading it out over less people.
Oh my God!
It's crazy.
But it's somewhere between just aggravating and tragic. Your government can't count. They just can't count. There's that infuriating a little bit too.
That word brings.
So that was Ben's contribution. Benny's contribution. He says, I don't think you know how many people are here.
Nice.
Okay, so
awesome.
You better start. And of course, people said, "Oh well, was that true? How do we know it's true?" Well, here's the thing: StatsCan, where all this stuff originates from, they didn't say no. They didn't say, "Oh no, God, no, he is wrong. Benny Tal is so wrong." They never said that. They said, "Well, we're going to study this, and we think
we'll look into that.
We feel we may rethink this." Okay. Is our chip in? We're good?
Yeah, it's a little one here.
Okay, cool. Sometimes we have to do a little studio maintenance, folks. Okay,
it's in the little one goes. This is the adapter.
Oh, that's the adapter. Okay,
that's
cool.
The adapter.
So that was news this week.
Okay.
That was news. The other really interesting news came out this morning, which is the Canadian Gross Domestic Product, the GDP, which essentially says how the economy's doing. It's growing. How much is it growing? Is it ahead of estimates? Well, folks, looking like we're fucked. Okay, like seriously, like they look back over. Oh, you know what? We thought the economy grew in July and stuff, and maybe even June, but you know what? It didn't.
We just fucking counted wrong again?
Yeah, but this is slim. This is this isn't like misplacing 1 million people. Okay, this is like sort of positive 0.3, negative 0.2, whatever. Anyway, bad news. All bad news. Economy not going good. Okay, no. Which can lead you to think that maybe there may be no increase at this meeting that's going to happen tomorrow at the Bank of Canada announcement. Maybe no increase. We'll see.
When does that happen? On the 6th?
That's the 6th, yeah.
Okay.
We're going to know on the 6th. So that's a very meaningful piece of news because the job numbers in the United States are not expanding great again. They were like running hot, the job numbers in the US. Job numbers here are running hot too. Not running hot anymore. So it's really starting to look like a recession may be arriving. I
think it's been looming for a bit.
Yeah. Mind you, the beauty of it, when you have like 1 million new Canadians come here a year, like 1 million people from immigration a year, but maybe it's 2 million. We're not sure. Yeah. But like when you pour so many new people into a country, it lifts the economy all by itself, right? Like they got to have a place to sleep, they got to eat, they got to drive somewhere somehow. Like they consume, therefore the economy grows, right?
Yeah.
But that also points out the really bad news that while the Canadian whole country gross domestic product GDP has gone down slightly, the individual, if you divide it up by the number of people, it's much worse. Okay, it's terrible. Okay, really terrible. Like honestly, it's like the Americans are like 50% better than we are in terms of having money in their hands to spend. Okay, so anyway, all bad news there. Can't count people. Economy not going good. What else is going on? This is a cute one. I'm not mad at the guy for saying it, but I just thought it was a wonderful turn of phrase. So the banks had their earnings reports.
Okay.
Every quarter, the banks come out. They put on a little mini conference. The executives hang out. The group of stock analysts ask them questions. What happened here? What happened there? Explain your numbers.
Is there more lobster at this meeting?
There's no lobster at this meeting. It's all very serious. It's only an hour and a half. It's not a long thing. It's just the CEOs of the banks and all of their top executives answer questions about how the bank's going, what's going on at the bank. Yeah. They publish their report. They publish their numbers, which are basically accounting reports, and how they made profit, how they did. And all of these banks, every one of the big banks in Canada, the 6 big banks, they are all radically increasing what are referred to as loan loss reserves. So this is the money that banks set aside because they look at what's happening in their book of business. They look at what's happening with their loans. They try to forecast how the loans are going to work out.
They're preparing for the worst.
Yeah, they are.
Wow.
Like, maybe not the worst. The worst is like really, really bad. They're just substantially increasing the money they set aside where they say, we don't think some of these loans are going to pay us back. Okay. We have to write them off now. So they've all increased them quite substantially. But the great remark, I thought, there's a guy at Scotiabank named Dan Rees. I'm not beating this guy up at all. I just thought it was a clever remark. He's talking about his renewal book and his mortgages, like all of his mortgage renewal book, and how they have rates that are obviously much higher than they were a year ago, 2 years ago.
Everyone does.
Every bank does. They're all the same. But he was a little more honest and straightforward about his view of the results, where the analyst asked him questions about where his whole mortgage portfolio is going. It's not growing. It seems to be going down slightly. And he said, I'll paraphrase him a little, but key word he said. We're actually fine with the idea that some of our customers deselect themselves. Deselect. And the great thing about it, what is deselect? What is deselect?
I'm confused.
It's because they look at those high rates and say, I don't want to pay them. Mm-hmm. And they find another bank to take their mortgage to. Okay.
Yeah.
Which I thought it was a great line because maybe it's necessary to defend your margins. Like maybe it's necessary. Like don't get me wrong, I'm all for low rates. That's what the whole Butler mortgage is all about, is low rates. That's we built a whole business for decades on the lowest rate. But but that's me. I'm the broker. Mm-hmm. I can just look who has the best rate, search around who has the best rate, find it, and say, okay, these guys got the best rate. Take it.
Yeah.
Right?
There you go.
There you go. Mm-hmm. I don't have to worry about whether, and I'm not the person giving the money, right? Mm-hmm. So I don't have to worry about whether they're making money or not.
Well, you do to a degree. You have to make sure that you're not going to send a bunch of defaults
to a lender. We
God,
underwrite the files perfectly. But at the end of the day, the lender picks the rate.
Yeah.
We just look for the best one.
Yeah.
Okay. So if the bank says that some of his customers can deselect, what he's really saying is, if you don't like the rate,
go
elsewhere. And we need to make the margin we want to make. Okay.
Well, and it's true. Every lender has their own specific product, really, that they're offering. Some are very similar, but a place like Scotia is very specific.
And more to the point, really, you're correct. But the other point is different organizations have different costs of funds. Yeah. Like what it costs them to get the money to put out the mortgages is different. So, yeah. Anyway, I just thought it was a cute line. People were
deselect.
People across Canada thought that was an excellent. All the analysts thought, yeah, okay, that's good. We like that. That's a new one. All right. So that's the news. The big news, of course, is tomorrow. Bank of Canada. What do you think? You think they'll stay, or you think they'll stay, or they'll go up?
I think they're going to stay.
Why do you say that? Why do you think?
It's just been too much.
Too much.
I think they're going to stay.
Too much in terms of people are suffering.
Yes.
Okay.
And we're seeing all these reports come out, this, that, and the next. I don't know what kind of meetings have to happen this long weekend at Buddy's Cottage, but I hope they're going to stay. I think they're going to stay. I think it's enough.
Well, it's about a 30% chance now that they'll raise. So 70% against.
Yeah.
Okay. Particularly this GDP report kind of knocked a little bit out of it. But still, the bond market predictions, the bond market census still believes 80% chance there will be an increase this year. Jesus. Which has got a lot to do with the U.S. Mm-hmm. If the U.S. inflation continues to run too hot, then let's face it, you saw the gas prices go up, right? Here and the U.S.
Oh, yeah.
Yeah, they're way up. Okay.
What did I pay the other day? $180?
That's crazy.
Crazy. I have
gas
no idea.
Prices are through the roof. Not looking like they're going down anytime either.
No.
And as we all know, our favorite discussion for people who like to eat like me, clearly, is food prices way up.
Yeah. No, everything's right up. Restaurants, grocery store, doesn't matter what you're doing.
Oof, the restaurants, Jesus. Mm-hmm. Okay, so if the states feels they have to raise rates, then eventually Canada has to follow.
Canada usually follows suit.
It doesn't have much choice.
Yeah.
Or else the currency goes to rat shit. But still, I mean, they don't have to be perfectly in line. They don't have to. The Bank of Canada doesn't have to. So that's the news. Now, I promised last week that we were going to spend some time this week talking about private mortgages.
Private mortgages.
So first of all, we got to explain to everybody what the hell we're talking about when we talk about private mortgages. So, almost everybody gets a mortgage from a bank, right? I mean, everybody gets their mortgage from one of the 6 big banks or credit union or one of the big financial companies that offer mortgages like First National or MCAP or CMLS or, there's a whole host of different companies. EQ Bank and Home Trust all offer, they offer alternative lending, but they also offer low rate mortgages on fixed, just like a bank does.
Yeah, no, it's easy to understand if you just see it in 3 tiers. You've got your regular product, we call it B, or alternative. And then there's private.
Right. So the regular product is just what all these banks, all these finance companies, all these trust companies, all these credit unions are offering. And that's, just for essentially perfect customers. You got great
you
credit.
have to fit in a certain cookie cutter depending on what product you're going for.
Got to fit in the box.
Yeah.
Got to fit in the box. So a bunch of rules, bunch of underwriting. We'll talk in a minute about how it's maybe true that the bank regulator over the course of the last decade, and maybe even more severe soon, is that the bank regulator has sort of created a super mortgage category for the banks. Like the banks are like, the truth is the banks, they do a lot of mortgages because Canada's mortgage crazy and the price of houses is batshit crazy. So the balances are high. So the terms of the new mortgage origination, although it's way down this year, they have a huge mortgage book. But the truth is that they are kind of bound to have better and better borrowers because you know what the rules are like.
Yeah.
How tough it is to qualify.
Stringent. Yeah.
And then we got this.
Well, you joke with people. I mean, okay, we need everything except for your hair, blood, and urine samples.
Yeah, that's all. We're not going to take bodily fluids, okay? but otherwise, we're going to know everything about you by the time we're finished. So, and there's a stress test, 2%.
Yeah.
So it's big time. That's big time, and that means most people in Canada, if they want a new mortgage today, they got to qualify at over 8%. Well,
that's what we discussed last week.
So
about how crazy it is.
So we're going to talk about why these alternative lenders, and we're going to briefly touch on alternative, but we're going to move on to the private lending in a minute, but why there's so much growth there. Because if the rules have been changed so many times at the banks that stuff they could do 5 years ago they can't do, stuff they could do 10 years ago they can't do, stuff they could do 15 years ago easily they can't do, they just cannot do the mortgages they want to do. Well, maybe don't want is the wrong word, but they sure as hell could do them, okay?
Yeah.
They can't do them anymore. So somebody has to fill the gap.
Yeah.
It's just the way that a marketplace works, right?
Well, there's a need for a product. And when we say alternative, it is not necessarily a bad thing.
No.
But, you talk self-employed.
Yep.
You're self-employed. You make money. You probably make a very good amount of money, but you're self-employed. And that just normally doesn't fit in, like you said, the box of the traditional quote unquote lender.
Yeah, because let's face it, the banks, their greatest allegiance, if you're one of the big six banks, your greatest allegiance, your greatest loyalty, if it were. Sure, you love your clients, you love your stockholders, of course you do, okay?
Yeah.
But it's the government, because there's only six banks for a whole goddamn country.
Yeah, not a lot.
The six banks do 86% of all financial transactions. Like maybe sometimes you think you're dealing with somebody, like you might think you're dealing with Simply, you might think you're dealing with Tangerine, that's separate. Not separate. You're just part of the big banks, okay? And a lot of the money that goes to fund mortgages at many other institutions ultimately comes from the big banks.
Yeah, it just hit a couple more hands before it got to you.
Exactly. Yeah. And you could even be using a Brick credit card, or you could be using a Tim Hortons credit card. Okay.
Tim Hortons has credit cards.
Tim Hortons has credit card now. Yeah, honest to God. Yeah.
If you need to finance your double, I don't know.
No, I don't think I don't think this is meant. This is not meant to finance Timbits. No, it's not. Okay, but what I think it's meant to be is that you can use it everywhere. By the way, I don't have one.
Oh, but you get like the Tim's points.
But you get the points. Yeah, you get the points.
Because you know what? I am that person that taps at Tim Hortons because I use my card for everything.
Yeah.
Like I think we're flying for free. Like on our next vacation because of my points. Like that's why I use it for absolutely
But not
everything.
Tim's not give you airlines points. No,
I don't have a Tim's card either.
Okay. But what I'm saying is
good old fashioned Aeroplan.
I think that's the plan. Yeah. Okay, that's the plan. That it's not about financing donuts. It's about it's about we want you to use it for everything so you have more points so you can eat more donuts. Okay. So
perfect.
Anyway, yeah.
It's right up our alley.
But at the end of the day, we both know that Tim's hasn't invented their whole banking system to do their own bank to do this.
So I wonder who backs that one.
Somebody does. Doesn't this is so common. Let's face it. The wholesale financing for a lot of finance companies in this country is from a bank.
Yeah.
Okay, that's just the way it goes.
Oh, speaking of credit cards, the most utter stupidity I saw the other day, trying to verify ID, and some lenders allow photo ID and then a credit card.
Yep.
Right? This person's sending me the ID form filled out, and the second form of ID was the American Express Visa.
American Express is not a Visa, is it?
No,
it's American Express.
I'm trying to explain to this person, American Express did not get with Visa. They're two different financial institutions.
They're never sleeping together, those two. Yeah, no, they're not.
So either you're not verifying this ID and you're just writing whatever the fuck you want to, or like something's wrong here. Something's wrong.
Christ, yeah.
What are you gonna do?
Yeah, so. Oh my God, credit cards. We could do a whole show on credit cards. We're not going to. We're not going to. We can do a whole show on credit cards. Angry card. Okay. Angry credit card.
That's the next podcast
that's
coming
the next
out soon.
Yeah. Holy shit. All right. So the next tier after the banks is alternative lenders.
Yes.
So these are
B.
Well, they don't want us to call them B lenders anymore because it makes them sound like they're second class. Okay. But we'll call them alternative. Yeah, I know. But we're going to call them alternative lenders. Okay. So what that really means is that they have a different approach to lending. It's they can deal with a little bit bruised credit scores, FICO scores that are not as good. Self-employed is easier for them.
Yes,
they have a different
definitely.
approach to it. Now you might say, well, whoa, Ron, like, what the hell? If they're really banks, why can't they all have the same rules? Good question. I'll tell you the reason. They approach their funding in a different way.
Yes.
You can't securitize B lending. You could try. Some people have tried, but it's a small, tiny part of it. What it is you must take deposits. You have to match your deposits against your mortgages. So you can't lend so in other words, you've got to offer GICs.
Oh, okay.
So you got to offer a 1-year GIC against a 1-year mortgage, a 2-year GIC against a 2-year mortgage.
Which is typically why the terms for the alternative, I'll stop calling them B, are usually 1 year.
Or 3. They go 1 to 3 because that's what people want.
When's the last time you saw a 2 or 3 years?
Oh, no, they're pushing 2 and 3 years right now. But that's because there's lots of interest in 2 and 3 year GICs.
Oh, okay.
Okay. So, but yeah, there's no 10-year friggin' mortgage for those guys because there's no 10-year GIC. That's as simple as that. So they are funded differently and they have to retain a bit more capital, not enormously more, but they have to be very meticulous about property. Now, by the way, we got a fantastic show coming up later in the week on Thursday, where we have Nick Cipriano, who is the CEO and president of River Rock Mortgage, and he's going to give a tremendous insight into how these private mortgages do work. So we'll quickly move past the home trusts and EQ banks of the world and the community trust. And because those are the companies that are in the alternative lending space, the main ones. Okay? Yeah. There's a few others, but main ones. Yeah. There's a Veo and Eclipse and Excalibur. There's a bunch of companies in that business. But specifically, I would say the big 3 are Home Trust, Equitable Bank, EQ Bank, and Community Trust. Be the big. There's another one called Haven Tree. It's not quite as big. But
they're starting to do a lot though.
They're doing more.
They're hearing more and more about Haven Tree.
Those guys, But if we just look at the stats, the big ones. So, by the way, Home Trust the sale was completed just last.
Oh yeah, we were hearing about that around Christmas.
But it's closed.
Wow.
So Mr. Stephen Smith, through Smith Financial, which is his family office. Now is the proud owner of a bank.
Oh.
He owns Home Trust now. Lock, stock, and barrel. He owns every share.
Did all our friends survive?
Sure.
Okay,
Everybody's
good.
there.
Okay.
Everybody's still there. Everything's
Hey.
good. Everything's good. Everything's good. Nothing's wrong. But I'll just say it it was super fast.
Yeah.
The story of Stephen Smith is amazing. This man started from absolutely nothing.
And now he owns.
In fact, his first business when he was a young man, went bankrupt.
Oh.
Because people have that. It can happen to people. Absolutely, you can.
It's not hard.
You could, if you try. It's about trying something new in business, and they don't always work. It's as simple as that. So there he was. I think if I remember the story he told in the magazine article, he had to move in with his sister. Okay, like times were tough. And from that point, I think it was 38 odd years ago, Mr. Smith's now worth $4 billion.
He did well.
And he owns his own bank.
Wow. Founded
First National. He and Teachers Pension Plan basically recreated Canada Guarantee, which is it's now actually the second biggest mortgage insurer in Canada. It's just a tremendous organization. So that was, I think he made like $1.5 billion just on that one.
That's not a bad day.
Fantastic return. But he took some risks. Like when he took it over, it was a little bit of a rough shape.
Yeah.
Okay. And he's the biggest shareholder in EQ Bank. I don't know. Now he owns Home Trust.
Nice.
Lock, stock, every little bit of it. And it closed. I knew it was going to close. And I think it's going to be a tremendous success. I mean, because everybody in business says the same thing. Everybody who's the owner of business says the same guiding principle. We will grow the business and meticulously control expenses. That is the mantra of all businesses forever.
It has to be, yeah.
Keep expenses down and grow the top line, grow the revenue.
Yeah.
Okay. It's the mantra you hear from everybody. Everybody says it. Damn few fuckers can do it. Okay. it's say it all the time. People say it all the time. You hear it all the time. And it doesn't turn out. But with Stephen Smith, it fucking happens. He will make it happen. He will grow a business, and he will meticulously control expenses.
But how old is he?
Yeah, he's older than me, so that's pretty fucking old, right? I mean, yeah, he's older than me. Mr. Smith is older than me. Okay, he's in much better shape. I mean, he's in much better shape. He's biking, he's skiing, but he's older than me, though. Okay. Like, he's going to outlive me, that's for sure. Okay, wow. Even though he's older, he's probably going to go far past me. But yeah, it's a great story. It's a great story for Canadian success for the man. It's a great story for the company because Stephen Smith knows how to run a business. We're all going to see it happen. Okay, so on to the next tier. We've talked about the banks. The banks do almost, they do a huge number of mortgages in Canada. And then the alternative lenders, who we talked about, they do a chunk of mortgages. But finally, there's a group that, if you need a mortgage and you can't fit.
Yeah.
Like the FICO score is just not workable. It's it's probably, or maybe not. We'll go on to the other category. You cannot validate your income to save your life.
None
you just
whatsoever,
can't.
yeah.
Not whatsoever, okay? Like you can't. You just can't. Like, what's your income?
I sell apples by the roadside.
Like
Eggs
I have my corner on the off ramp off the 401 where I have a sign that talks about I'm in tough times. Okay?
Jesus Christ, don't go there.
Walk down the line. That's my job. or like you don't show any income in your business, or maybe your business has fallen on hard times and it just doesn't look that good, or you're someone from out of Canada. Okay, you're new to Canada, or you're living outside of Canada. Okay, we'll touch on that living outside of Canada thing in a minute. It's a little scary.
Private doesn't always mean destitute, though.
No. Yeah. And as a matter of fact, it sometimes it's the opposite.
Yeah.
Sometimes it's just I could pay cash, but
it's a short-term solution. You need 3 months, you need 6 months to figure something out, and you don't want to lock into something longer than that.
But unfortunately, sometimes it is just people who they don't make enough money.
Yeah.
But here's what happens. In a country where the price of homes has gone up 300% in some places in 12 years, 300%. Yeah,
that's a lot.
You just might have bought a house for $250,000 when you were working. And when you did have some money and when things were going okay, and 15 years later, it's worth $900,000, and things aren't going so good.
And you need to pull some funds out.
But you got a lot of equity in your house. You're in great shape there. So that's what happens. So if we define what happens through private lending, so private lending falls again into sort of really two categories. It falls into two categories. Mix, mortgage investment corporations. And like I said, we're going to do a whole show with Nick Cipriano next week. He's going to have a long discussion about that. And he's really, really insightful, really good at talking about how a MIC works, how his MIC works. It's really great. It's just, it's easy to understand when he tells you the story. And the rest is just private people.
Yeah.
Private human beings who loaning money, who have a lot of money, are big lines of credit on their homes, and they're lending money to people who need their money.
Well, yeah, and it is, as an investment, it can be quite lucrative. If you're being careful about where you're putting your money.
Sure.
The market, there's always a risk.
There's always a risk. There's always a risk, but there's mainly a systemic risk. There's a systemic risk that the whole marketplace comes down, and that's what you got to guard against. But because in essence, when you're a human being who has $1 million in their bank account and you want to lend out mortgages, you have to decide how much you're willing to lend on each house. But more to the point, what's the safety margin? Like if you are looking at a house, you say it's worth $1 million, you get a good appraisal, you get a solid appraisal done, it's worth $1 million, and you check with the real estate people in the area, and they agree it's worth $1 million. And the other side only wants $500,000. The borrower only wants $500,000
there to play with.
50%. You figure even if this guy doesn't pay me a nickel, I can hire. He bounces the first check. I could hire a lawyer, chase him out, sell the house, and I'm good. Okay, yeah. I don't have any worries. That's the foundational principle of private lending. Yeah. It's called loan to value. Yes. Okay, so if I've got great loan to value, if I'm lending a first mortgage at 50% of the value of the house, 50% value of the house, I don't think I can go wrong.
No, okay? the risk really isn't there. Now, if you're in third position,
you could be confuckled.
Yes.
Okay. You could wish you'd never heard of that house. Okay. Yeah. So that's how it works. So it's like first position. You got a first mortgage, like the first mortgage with your bank, and the rates today on those things are around, I'd say generally 9.5.
Yeah.
Okay.
Just slightly higher than the alternative side.
Yeah, so if we run it down, so we got mortgages from the banks right now in the 6% range.
Yeah.
We got mortgages on the alternative side in the 7, maybe 8%, but mainly 7. So they're in the 7% range. And then we have private money, which theoretically is taking more risk. It's not always taking more risk, sometimes less risk, but it's in the 9s.
Yeah.
Okay. Some people would say, "Oh no, I read somewhere it's like I read somewhere it's 7, 8, 9." Yeah, it's 7, 8, 9, but they hit you with a fee of like 5%. So they know how to grab their money.
But what as high as 13% when it is all said and done?
Well, yeah, but I mean, I would say even so. So we'll give the quick course here. So every private mortgage is based on two things. It's based on a rate, which is right in your contract. It's a 1-year mortgage, 2-year mortgage, never more than that. Normally, I'd say 90% of the time. 6 months or a year is what you see.
Yeah.
And there's a rate. So let's say it's 9.5%. But there's also a fee. So when you want your $500,000, they charge you a fee of 2%. So they knock off
onto the back half.
Well, they take it off the front. So instead of getting instead of getting 500, you're only getting 490. They took a fee off the top.
Oh, okay. But it's paid back up. Never mind.
Yeah, but when it's paid back, you got to pay back the whole $500,000. In other words, the mortgage is for $500,000, but you just scooped 10 grand off it. Okay. Yeah. So that's what we refer to as a yield. The combination of the interest rate and the fee is the yield on the mortgage. And that's about right. They're about 12%. Yeah. 11.5%, 12%. So I'm not trying to teach everybody how to become a private lender, but I'm sort of trying to illustrate what the consumer's issues are. Okay. So rates, fees, but let's talk about something else. Let's talk about the contract. So this is where people can get in trouble. People get in trouble on these private mortgages because the contracts are different. The contracts between government licensed institutions are pretty straightforward.
It's all pre-printed, I would say.
It's all pretty standardized, and lawyers are used to it. They understand it. But private mortgages, these private mortgage guys, some of them are making up some contract provisions that are fucked up. Okay, they are fucked up. So let's break it down for you, folks. So people can get a mortgage. Sure, there's a rate. We see the rate. It's got to be there. You got to see it. There's a fee. Yes, I understand what the fee is. But then what happens at the end of the process? Or what happens if you miss a payment? That's interesting.
Huge NFS fee.
Yeah, there's a NSF fee. There's a missed payment fee. Like You know, like the bank is
there's
like
go fuck yourself
$35
for being
There's that. There's the bank's like $35 if you miss a payment.
Yeah.
Maybe 25. How about 500 if you miss a payment? You gotta give me $500. Wait a minute, the payment was only 1,000. That's fucking nothing. No, you're giving it to me. That's right in the goddamn contract. Okay. So there's that. There's a payment fee. There's a what if you don't pay your property tax on time fee? Ooh. Think about that for a minute. Like, because the contract says you got to pay your property tax on time. The contract says you got to have house insurance. So if you somehow miss your house insurance renewal, and the notice goes to the lender that you no longer have house insurance, well, the lender now has the right to get the house insurance for you. Like, he'll pay for the house insurance for you, except he's going to charge you $2,000. Yeah, house insurance might only be $800. He can charge you $2,000. He pays your property tax when you fall behind on the property tax, but he charges you $800 to make a payment on the property tax. Okay, like people are saying, no, Ron, it can't be that bad. Fuck you, it's bad. Okay, yeah. Like it's bad. Like the contract provision, some of them are fine. Don't get me wrong. There's some very, very honest private lenders out there, decent people, reasonable contracts.
Definitely, it's all.
But there's a few.
They're evil fucking assholes.
Evil stuff going on. Yeah. They're going to try to do everything they can to pull every nickel out of you. And, you know, is it right? Is it wrong? But it is what it is. Yeah. Okay. And what you have to do is understand that you got to read the contracts.
Read the contracts, and you are obligated to have your own independent legal advice. Use that fucking lawyer.
And use that. Yes, everybody has to use their own lawyer. All the mortgages are over $50,000 these days. You got to use your own lawyer. Yeah. You got to have somebody who goes through it. Goes through it before you sign for it. So, get back to first principles. The private mortgage is just individuals lending to individuals. Yeah. Essentially, unless you're a MIC, but seriously, a lot of mortgages just individuals to individuals. And it's a contract drawn up by a lawyer. You use a lawyer for the... Oh, by the way, you remember how there was a rate and a fee? Like there was 9.5%, and then there was a 2% fee, right? You got to pay the lender's lawyer. You got to pay the lender's lawyer to do the work, okay? Yeah. And you got to pay your own lawyer. You got to pay the lender's lawyer.
Well, realistically, if you're taking, say, $1 million out of your savings account to go lend it to some guy, you're not going to pay the legals.
I assure you, they do not. So that's for sure. Oh, and by the way, you know how there has to be an appraisal because there has to be an independent appraiser go out and make sure the valuation's correct, inspect your home. Oh yeah. Make sure you don't have a meth lab in the basement, or make sure
it still has floors and walls.
Yep, it's all there. If you're the borrower, you got to pay the appraiser too.
Fuck yeah, you do.
Even though the appraiser is for the lender, so there's a lot of fees. A lot of fees. You're paying a lot. So that's the first thing to understand. Look, I want to quickly go back to one of the points I raised earlier, is that this is one of the biggest growing parts of home financing today.
Well, of course it is, because we've already discussed it. People are priced out of traditional mortgages almost.
Exactly. And the underwriting is so tough. Like, I'll tell you, when I started in this business, you could go to any bank and say, I want to buy this house. I'm a customer of yours. I'm a longtime customer of yours. It doesn't matter who it is.
Yeah.
Go look at my
records. Yeah.
Yeah. Go look at my records. I don't show much income because, I'm running this club. We'll call it a club over here. Might be the ballet. I mean, it's a club somewhere. I'm running this club. And I bring in a lot of cash, okay? Yeah. But I don't show a lot of income to CRA. But you know me. You've seen my account for 20 years. I want to buy this place. I'm saved up 50% down payment.
Yeah, give me my money.
Give me a mortgage for 50%. Yeah. You know what the bank would say 15 years ago?
Sure.
Sign here. You got it, baby. You're a well-known customer. And it's a good 50% loan to value. And we see the money you got going into your bank. We trust you. We like you. Sign here. Here's the money.
And they probably know your wife's name and your kid's name and your dog's name.
Yeah. And they know you. Yeah. So that doesn't happen anymore.
No. Welcome today. And we have clients. Well, I've been a long time client of so-and-so bank. And doesn't that mean anything? No.
No. It means fuck off. Because a computer decides if you get a mortgage. Yeah. There's a human being who finally signs off and doesn't approve, but mostly it's a computer.
To get to that human, you got to go through the machine.
You got to go through the machine. Yeah. So at the end of the day, and because OSFI, the bank regulator, has continued to tighten and tighten and tighten rules, there's people who can't qualify who just maybe should qualify at their bank. Okay, that's the truth. So OSFI, thank you. Peter Rutledge, thank you. you're pushing more and more Canadians into private lending. Thanks very much. But by the way, Peter Rutledge would say, who runs OSFI, he would say, that's my job. I am the superintendent, the Office of the Superintendent of Financial Institutions, not consumer good. So I'm going to protect the bank. And if that means a few people don't get a mortgage, I'm doing my job. Okay. All right.
Do you, boo?
It may not be turning out the way it should. Anyhow, so this part of lending, this part of mortgage lending, the private lending side, has grown and grown.
Of course
and
it
grown
has.
And grown.
It has to.
It's expensive. It's expensive for Canadians. So we've talked about how it worked. We've talked about what it costs. Let me talk about what might potentially be the worst thing about it. The worst thing about it is, with every bank in Canada, if you've paid your mortgage on time, they send you a renewal offer, and you didn't have to prove that you were still working where you were working. It's 5 years later. It's 3 years later.
Yeah.
You don't have to prove where you're working. You have to prove your income. You don't even really have to prove the credit. The bank looks at the credit, but that's just to make sure you haven't gone bankrupt or something.
As long as you're within good standing, they have to renew you.
The tradition in Canada, which is approved by the government, by the way, the government likes this. There was a bunch of people like the regulator actually ran this up the flagpole a couple of years ago. Maybe we should have everybody prove their income on renewal. So the Department of Finance says, no, you crazy bastards. We got 5-year mortgages in Canada, not 30-year, not 25-year.
Heard the trickiness though that's happening that I've heard?
Which is that?
Certain lenders are sending out renewal notices with rates. It's right there. You can sign right on the dotted line. Here's your renewal. But if you would like to go through the re-qualifying process, there may be a
re-underwritten.
There may be a better.
I hadn't heard that, but that doesn't surprise me.
I've heard of it from 3 different people.
That does not surprise me.
There's a different set. So they give you the initial
2 sets of rates. Okay.
And they don't tell you what the new set of rates is because it's going to depend on you providing
how it works out.
Your income and your credit and all that stuff.
Fascinating.
Again.
That's fascinating. I so believe that's happening.
I've heard this on 3 different occasions.
I so believe that's happening because that makes a lot of sense to a bank. Okay, so that's but normally if you're with a bank you will always get offered a renewal.
100%.
Hey, guess what? Private mortgage?
Fuck you, pay me.
Or yeah, I was
I want my money back.
I was on this mortgage with Aunt Matilda, and Aunt Matilda passed, so we need all the money back. We need the $500,000 back now.
Yeah.
What do you mean you need the $500,000 back? I don't have $500,000. Well, you're gonna have to go find somebody else to give you the money. Holy fuck! I'm startled. I don't know what to do. And maybe your situation's not as good, and maybe the house, who knows? But that's the worst part of it. Is renewal. You may not get a renewal. Or how about this one? Yes, we will renew you. Oh, good. So I was paying 9.5 before. Can I get a little bit better deal? No. We have decided to charge you 16%. What the fuck? 16%? Are you crazy? But maybe they know you can't go anywhere else. So that's the trouble with private lending.
Bastard evil.
Don't get me wrong. I got to keep qualifying this. There's some honest, solid citizens out there. They're, like I say, we're talking to Nick Cipriano. We're going to talk to a couple of other private lending people in the coming months. Solid citizens, great people. They run great operations, but there are bandits out there.
Oh,
I'll tell you about my favorite private mortgage horror. We're going to finish with the worst one, but I got to tell you about private mortgage horror stories.
Okay.
There was a guy named Dennis Khanna who was running around. By the way, I can say his name and I can say everything because he's gone to court. He's been to court. He was arrested. It's public record. Okay. So Dennis Khanna in Hamilton, he was a longtime private lender. He did a lot of business. And he was well known to not be trustworthy.
Okay.
And what he ended up doing near the end, it's like everything else. You try little things, little crooked things, and then you expand.
Snowball.
Okay. So his first trick was he would bring you out a huge package to sign, like so thick, like they're like 400 pages or something, and you'd be initialing. And first of all, he would show you the front of it, what you thought you were getting. Then you would keep signing, and then you're getting tired and bored, and you're not reading everything. You sign, initial, sign, initial. Well, you thought you were getting one mortgage, but Dennis was having you sign 3 mortgages.
Oh.
Yeah, he was doing a second, a third, and a fourth. He was doing all of those, okay?
Oh, my God.
Then the really crazy part was this. When the TerraNet system, TerraView and the TerraNet, the title system in Ontario, the digital title system came in, you could pretty much just apply to get a PIN number to give you entry to the system. Now, they subsequently changed all that. They said, wait a second, maybe everybody doesn't. Yeah, maybe it should just be lawyers. It better just be lawyers. Yeah. Okay, we just have lawyers do this. Okay, but Dennis got a PIN number. Dennis could reach into the system and register his own mortgages.
Wow.
Which he did. He did. So Dennis would like make a pitch to people in their kitchen tables, sign them up to 3 mortgages. Okay, and they only think they're getting 1. And then he would register the next day. Sometimes people would phone him back and say, I think we were under a lot of pressure last night, and I think we don't want to go ahead. Oh, no, I'm having the courier bring you the check. We've registered that mortgage. You are fucked. Okay, you got that mortgage now. You're keeping it forever. Well, here's a crook, like really huge crook. He was doing all kinds of evil doings with the mortgages.
How much time did he do?
No, but he wasn't charged with that. Oh. Okay. He decided if he was having so much enjoyment abusing the people and ripping them off for money, that eventually he just went whole hog and started sexually assaulting people. Okay. What? In exchange for the mortgage payment. Okay. Yeah, I'm not kidding. He would like do a mortgage for a lady who might have been an exotic dancer. Okay.
Okay.
In Hamilton. And then she might fall behind on the payments. He'd go to her house and say, I have a different way for you to pay me.
Wow.
Yeah, he did that. Wow. Okay. But the thing that got him arrested was when he went to the dancer's house one time, he noticed after a couple of times he would either, let's say he picked up the payment. Okay. Payment. So he noticed that the dancer's daughter was living in the house. She was only 14. Okay. So he arranged it so that he would come. One time he came to, it was too soon. Like he came to the house knowing that the mother wasn't there. And the daughter had seen him come to the house a couple of months.
Don't tell me she
So he talked his way in. He had a Mickey of vodka in his briefcase, and he started offering this poor 14-year-old girl the vodka, okay?
No, that's
gross. That was the straw that broke the camel's back. The mother found out.
No fucking shit.
Nothing happened to the girl. But nothing happened to the girl. But like this was so goddamn outrageous.
Yeah.
That the mom lost her mind, went to the cops. Pretty soon there were other people reporting all the shit he was up to, because he was doing this with lots of people.
So he got Me Too'd.
He got the shit out of Me Too'd, okay? And they shut him down. Now, at the time, the regulator wasn't these guys we have today. Our regulator today is called FSRA. This was an old regulator called FSCO. And quite frankly, the prior mortgage broker regulator prior to FSRA does a good job. But these FSCO guys were just dipshits.
A little bit loose.
Yeah. So they were terrible. So they did an audit on Dennis once. And they found that he had got 1,132 mistakes in his audit.
Awesome.
Okay. So when they showed him this huge report that you did all this wrong stuff, he says, okay, I promise not to do it again. And they said, okay, since you promised, you should be good. We'll check later. Everything will be fine. That was before he started assaulting people. Okay.
Okay.
So when the cops found out he was up to this, that he charged him with assault, they arrested him. Charged him with sexual assault, being a predator, the whole 9 yards. They arrested him. They realized he was a mortgage broker. They heard about all the stuff he was doing. So they phoned up FSCO at the time and said, it was FSCO. Yeah. They phoned up the regulator and said, oh, you better come down and close this guy's office because we're putting him in jail. And, we think he's, we think you should do a thorough investigation and seize all his records, and you should take his license away from him because we've arrested him. And the regulator said, no, I don't know. We'll think about it. I don't know. So there was a sergeant on the desk at the time, and they called him in and said, yeah, these mortgage regulators don't want to do anything.
They don't seem to give a fuck.
They don't seem to care much. And so he said, let me call him. And he said, hey, yeah. I said, no, we think we're not sure. We'll think about it for a few weeks. The sergeant said, here's what I'm going to do. If you don't come down tomorrow and lock that office up and seize all the files, I'm going to the Hamilton Spectator's newspaper, folks. I know some of you don't know what that is, a newspaper, but the younger folks don't know what a newspaper is, but it was a famous newspaper in Hamilton, the Hamilton Spectator. And this was years ago. And he said, I'm going to call the Spectator. I'm going to call the radio stations. I'm going to call the local TV station. And I'm going to explain to them that you won't do anything about this evildoer. So you had a choice. You either show up at his office, I'll let you in tomorrow, and you seize the place and seize the files and shut him down, or I'm going to the press. So they showed up and they shut him down.
I'm sure they did.
Look, once again, old regulator, new regulator, good. Old regulator, bad. Okay.
Reason why they not there yet.
The reason why they're gone. There's a lot of reasons why they're gone. They were all gone. Every single one of them got let go.
It was
every
a
single
massacre.
one. Massacre there. Yeah. They were bad news. They got let go. So that's the famous Dennis Conner story. Okay. There's some bad actors in the private mortgage world, but there's bad actors in every kind of a thing. So the main thing I want to say about this stuff is, and we're gonna finish up in a minute, but the main thing I want to say about this stuff with private lending is a lot of it is reasonable. A lot of it is somebody, he sees an opportunity to buy a broken down house and fix it with this.
If the shoe fits, wear it.
Just do it. It's great. They've got business reasons that they're doing things. They've got,
personal reasons.
Personal reasons. But here's what I want to say. Sometimes people are victims. And I don't want, one of the most important things I keep trying to put out in social media is don't blame victims, okay? Because a lot of times when people see a terrible mortgage deal, like a bad private mortgage, the first thing they say is, well, why did you sign this? You were crazy to sign it. You should have done this and this, okay? But like sometimes people aren't thinking rationally. Sometimes they're under points of great stress.
Sometimes a panic.
And a panic.
Signing on this line is going to solve all your problems for the next year.
It's going to make your stress go away temporarily. And you might end up with more stress.
You're going to be okay for a year.
But folks out there,
sometimes people need it.
Please don't say that because there are people taking advantage of it. There might have been a guy who they finally took him off the radio and the TV. Finally, you don't see his ads anymore. But they might have been a guy who might have also sold jewelry. Like he was a jeweler. He was a name the jewelry guy, okay? Who was doing private mortgages and did all kinds of horrible things to people, but always old people, always widows and widowers without families, okay? Did horrible, horrible mortgages, terrible advantage taking, just awful. But people would say, oh, she should never have signed that. She should have done that.
She was 100 years old.
She was 80, or she was scared, or she was desperate to do something, or
you just get in front of somebody who's a good talker.
Or her family was trying to take advantage of her, and they wanted her to take out a mortgage so they could get their hands on the money. Folks, don't blame the victim. When you hear these stories in the press or social media about people who got into a terrible bind on a private mortgage, don't say, oh, well, they're just dumb, or they're just greedy, or they just shouldn't have done it. Don't say that.
No.
People can be taken advantage of.
Easily.
Which brings us to our favorite part of the show.
What the actual fuck?
What the actual fuck? So I'm going to say this in a very intense way.
Okay.
Like, what the actual fuck is wrong with some of these private lenders? I'm going to change some of the names to protect the innocent and also protect the guilty, because we don't need the lawyer's letter about this. Yeah. Okay. But there's a mortgage broker, a well-known mortgage broker who advertises. He's got a podcast. It's a shitty podcast, but he's got a podcast. Okay. Private lending. Okay. Well-known in the business. This guy is a motherfucker. Okay. Let me explain. Somebody used to work for us who left our company, okay? Went on to make some life changes, left our company. But continued to work in the mortgage business.
Sure.
She ended up, let's just call this mortgage broker Mr. Motherfucker. Okay. It makes life easier, okay?
So ex-employee goes to work for Mr. Motherfucker.
Right. And she's helping him get his mortgages processed, and she's doing the job for him, okay? And then she runs into what was for her an extremely serious life problem with a family member. Okay.
Sure.
Very serious. Family member had to be helped. Real desperate situation. So she took a mortgage through her own employer, Mr. Motherfucker. Okay. And then her situation, so the private mortgage, it was like, okay, it was like, 8.5, whatever. Then she got in even a little more trouble. And she decided she had to get the mortgage prepaid. Okay, so you could do that with mortgages. You can have mortgages where you don't make the payments. They just take the mortgage off. You've heard of reverse mortgage, a little bit like reverse mortgage. Yeah. Except they take the payment for 1 year off the top. They take it off the mortgage. They deduct it. So she got in a little bit more problems with this family member who needed some more serious help. And but at the time, she left. She had left that place.
So she doesn't work for Mr.
She doesn't work for Mr. Motherfucker anymore. But that Mr. Motherfucker was the best person she could turn to because she knew him and he already had the mortgage.
There's a trust there. But
it's an unfounded trust because he was a little pissed off about her leaving. Okay, he's a little upset about her leaving, but still he says, well, I'm going to help you. I'm going to help you, Miss Employee. Okay, I'm going to help you, but, times, rates are difficult. And, I think here's what I want to do. I want to do the same, like 8.99 rate for the first 6 months, but I think you can solve the problem, right, in the first 6 months, so then you could pay me back. Well, the truth is she could never pay him back. It's absolutely crazy. She doesn't have the income to pay him back. There's a lot of other reasons. But he said, but for the second 6 months, we're going to do a 1 year mortgage broken up into two parts, first 6 months, second 6 months. First 6 months is $8.99, which is kind of expensive, but still it's a
decent.
It's a rate that exists in that. But the next 6 months is $21.99.
Wow.
22%, Mr. Motherfucker was charging her on the last 6 months. Okay.
Shit.
So she's desperate. She's desperate to help the family member.
Wow.
Signs off. She figures I'll find a way out in 6 months, but things go from bad to worse because when you're, and you just. So then the year rolls around, but it's prepaid, right? The final 6 months is prepaid, but at 21.99%. Okay,
insanity.
It's insanity. It's credit card interest on a mortgage for $500,000. Okay, yeah. So then it comes to an end. He says, "Look, I'm not going to renew. Now I'm not going to renew. Now that I've sucked the blood out of you with this 21.99% interest rate." I'm not going to renew. You got to, well, who am I going to turn to? What am I going to do? Okay. Well, it doesn't matter. I'm going to put you in a power sale. Yeah. So, and during the time where she couldn't pay, he's charging the 21.99%, which was like $10,000 a month. Okay. Wow. Oh, but wait, there's more. Okay. Oh. He added extra fees on top of the 21.99%, because he said you need to pay interest on interest that I'm missing on the payment, which is completely fucking illegal. Okay. Huh. And then he started making up all kinds of other fees like, you missed your you missed your renewal fee. That's another $3,000. And then you missed this fee and you missed that fee. And you haven't
fuck you fee.
And you haven't paid your property tax on time. So that's another. That was a fee that was 3 times the amount of the property tax was the fee. Okay. Oh. And by the way, he still didn't pay it. He just said, there's a fee. I'm not paying it, but there's a fee from you not paying it. Okay. So when this poor person got to me, he had run up this batshit insane bill, Mr. Motherfucker. Okay. Remember, this is his ex-employee. And as the poor woman said to me, I couldn't believe that he would do this. I trusted him. Okay. I knew what I was getting into. I knew he was making a mistake, but I was desperate. But I trusted him that in the end, we'd find a way out of this.
Yeah.
Okay.
Civilly.
But Mr. Motherfucker, the shitty podcast, shitty mortgage brokerage owner, motherfucker, okay? He went ahead and did all this enormous destruction. Well, we got a lawyer working for her and pointed out that like most of the charges were illegal. The fees were illegal. All the stuff was going on was illegal. God. It was all illegal. There was a whole other schmozzle. But in the end, I mean, she's going to, she can't stay, but at least we got like 70,000 in fake fees knocked off. 70,000 in fake fees. 70 in fake fees. Like there was stuff that you couldn't even understand. That was, there's statement fees, $500 each. But wait a minute, you're charging a statement fee every month. She never asked for a statement.
No.
Okay, we won't do that then. Like, holy fuck.
Yeah.
Okay, if you'd have pushed her out into power sale, well, there's all kinds of fees about being in power sale, too. There's like a $12,000 legal fee for being in power sale for 4 months, okay? Like, unmanageable shit, okay? So, all evil, all wrong. And, in the end, she said, I think he was just mad at me. He wanted to hurt me, okay?
Wow.
Like, that is no fucking excuse. Folks, once again, don't blame the victim. You don't know how much stress people are under. You don't know how much pressure people feel. You don't much know how they feel desperate to help their family member. We never know these things, okay?
Yeah.
But Mr. Motherfucker, and I think you might listen sometimes, or one of your associate motherfuckeries might listen to the podcast. I'm calling out you, Mr. Motherfucker. You know who you are, you dirty bastard with your shitty podcast, okay? Fuck you. You're a bad person. I hope all bad things happen to you. By the way, there's nothing we can do. There's no complaint you can make. There's nothing. It's all in the contract, okay? So yes, here, what the actual fuck that there's a motherfucker out there, Mr. Motherfucker, who is just pillaging his ex-employee because she quit. Like,
and who else is he pillaging too?
He's pillaging everybody, that dirty bastard.
Before.
He's done it before. If you've done it once, you've done it before. Like, that's it. We're going to close the podcast on, fuck you, motherfucker. Okay?
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.